So I stopped putting all of my money into dividend stocks. Now, if you followed along or have been somebody who's been interested in buying into dividends, you know that a dividend investor is very long term. And as somebody who's kind of going through this process of trying to build up their portfolio, has a decent amount kind of in there, well, I was mainly focused on dividends. And over the last couple of weeks, I've been really itching to kind of broaden my horizon a little bit more. Now, I've been doing non-dividend stocks for some time on one platform while focusing in on dividends on another. But I'm not really a big fan of doing a lot of splitting up with my portfolio, so I decided to actually go ahead and start adding in some growth stocks into my dividend portfolio. So I'm going to show you that right over here on the computer screen. So let's go ahead and jump on here and we're going to take a look. So we are here on my M1 Finance portfolio. This is where I mainly do most of my investing outside of my retirement. You can see here, current value is $7,869. So we are close to hitting that 8,000 marker, which is exciting. So what we're going to do as well is show you a little bit of my portfolio, but also kind of go over why I made this decision to add some growth stocks into my portfolio and not just my dividends. So I'm not entirely stopping my dividends, but I am of course adding some new stocks, which are going to take away from some of the money going into dividend stocks. Now, as of this recording, currently my holdings are at 29 positions, one of them being this ETF over here, and then everything else is just individual stocks, all the rest. So now, one of the biggest things for me as a dividend investor, I really like every single month when I am, going through the month and then I just get random paychecks, is what I like to call them, of dividends. So like right here, you can see VOO, Coca-Cola, Pepsi, Lockheed Martin, all these different companies I'm getting these dividend payouts from, and I love it because that's extra money I can go ahead and reinvest into my overall portfolio. But I've had some extra funds sitting in my Robinhood account where I was investing into different types of stocks that were more focused on the growth aspect of overall just, growing my money. And I realized that I had some stocks in my M1 Finance portfolio that weren't dividend paying stocks, and then I took them out for a while, but I decided to go ahead and add them back in. So let me go ahead and scroll down just a little bit further here. So these are all my slices. So if you're not too familiar with M1 Finance, you have your overall portfolio, which is a terrible circle over there. This is my overall portfolio. And you can see all these different colors right over here. This represents what they call slices of pie into the overall portfolio. So all of these are represented right over here. If I can get that done. Nice. So these right over here are all connected into one overall sectors or one overall pie. And these are all different sectors. You can have them as you wish, or like me, I have a couple that are kind of a little off center as far as what's inside of them. But beyond that, one of the newest ones that I've added is this growth one, because I actually did have some non-dividend stocks kind of intermingled with some of these other portfolios. So what I decided to do was put them in this little sector here. So these are the 4 companies that I decided to put all together. I've had them at one point or another in my M1 Finance account, but now I put them back all together into one sector. Now, of course, these are all tech companies, so they can go into the tech pie. But again, I just kind of wanted to go this route, just to kind of do things for myself, because you don't have to follow everybody's direction exactly the same. Nobody's portfolio should actually be exactly the same. Everybody has their own differences, so just something to keep in mind. But I have, of course, Google, Facebook, Amazon, and Tesla all in here. And don't worry, I have Apple and Microsoft as well. They are in my actual tech pie just overall. Now, one thing I hear from a lot of investors when it comes to getting started with a lot of these stocks is that they don't really have enough money to be able to put this money into their account. Now, obviously, M1 Finance does a great way of letting you do fractional shares, which means that you could put any dollar amount. You don't have to spend $3,000 on Amazon stock to have one share. You can buy smaller portions, and I absolutely love them for that. I'll have their link in the show notes down below. It does help support the channel so I can continue to provide free content just like this for you. So if you want to check them out, link down below. But honestly too, I have tons of tutorials on this channel about M1 Finance. With that being said, let's go ahead and finish up the rest of this content. Now, for me, I have this on my all tab right here. So you can see, I actually haven't owned these for very long. I can see exactly what date, but I'm already up market gains on this by $57.58. So for me right now, I'm actually up quite a bit for having this for a very short amount of time. So that does really kind of get me encouraged to say, hey, I am going to be investing in growth stocks, a little bit more than I was prior, because it does really help my overall portfolio. It is kind of like diversifying a little bit more and not just being pigeonholed to dividends. But for anybody that's also interested, just kind of keep that in mind, that just because a company doesn't pay dividends doesn't mean that it's not a good option to have in your portfolio. So let me actually go look at the date here to see when I bought these. So let me go into my activities here, and I'll go into Tesla. Let's see, because I bought and sold, so don't worry about those. It looks like right over here, so it was June 19th is when I actually bought it, and then this recording is happening on the 15th of July. So yeah, just a little bit under a month, and I already have, like I said, overall $57.57 across the board with all 4 of these. Obviously, Tesla's doing the best. If I sell right now, I'm actually gonna gain $45 on that. The rest of them are not doing as hot, but beyond that point, that's why I'm a little diversified with the growth stocks, not just one stock like Tesla or Amazon, Facebook, or just Google. I have all 4 of them, but that is helping me be a little bit more diverse to help grow my portfolio in other ways that were not possible with just most of the dividend stocks. Because if we go into my holdings and go into unrealized gains, so these are unrealized gains. Let me click that again. So right now, not percentage-wise, but dollar amount, I have Vanguard's S&P 500 fund. That is the highest dollar amount in growth. But let's see which fund is the highest percentage. So we got Discover right here at 29%. We got Tesla at 37%. And those are the 2 highest ones. And then we also have Ally right over here. So if I look at this, the fact that one of the stocks that I've only had for less than a month has already been a huge gain on my portfolio overall in comparison to a majority of the rest of these funds, and obviously even like this, actually all of my funds, the fact that it's the most growth, I mean, it does speak a lot of volume. Obviously, it really depends on the company and where they're going and how they're going to proceed in the future as well too. So if I look at all this, I can realize that yes, having a growth stock company or a couple of growth stock companies that don't pay dividends in my dividend portfolio can really benefit me in such a great way, because I am, again, diversifying my portfolio just that much more. So for me personally, I like this idea of getting into some of these growth stocks. These are the 4 that I find most valuable for me to have in this portfolio, because I have really big intentions with this account. So this is where I'm going to mainly house these growth stocks, because I think these are going to do very, very well for me long term. I think, if something happens to one or a couple of these, I can, of course, rotate them out as need be, just because I am able to buy fractional shares with these companies. I can also buy them, like you saw Amazon. Their current price is $3,000, which is insane, honestly. So I have fractional shares that I'm buying into them, so I'm buying them at small increments, but those small increments, of course, are still giving me gains. Even if they're small gains, they're still effectively benefiting me by increasing the value of my money over time. Now, of course, I don't get those gains unless I sell, but at this time, I don't plan on selling. If I do, you can follow along on the journey on the channel when I do share my investing stuff, so you can see how that all works out. Now, honestly, going through this process is never easy, because changing your mind, you kind of sometimes feel like you're, kind of messing up your ideas of where you wanted to go with investing, but don't be afraid to honestly change your process and path when it comes to investing, because the beginning starting points of this portfolio honestly do not look the same as they do today. Like, I have old videos, if you go back and look at, they honestly just look so different than where I am today. I used to have up to 55 stocks in my portfolio, and now I limit myself to 30 stocks and no more, just because I want to make sure I am kind of growing the positions that I have already without having to add so much more. So if things change for you, like, don't really feel bad about that, because it happens to me. It happens to a lot of other types of investors. Like, things are changing, obviously new information comes out with companies, so that can really be a factor in why you're holding them or why you want to get rid of them. So don't feel afraid about that. But if you're interested in constantly learning more about this stuff, definitely make sure you check out my next video right over here, so that way you can keep on learning and growing. My name is Dennis, and I will see you in that next video.